Hey guys, welcome back to the channel. In today's video, we're going to do a yearly and a weekly housing trend report for the San Fernando Valley.
Hey, welcome back everybody to another episode of Sold As Is. Today, Matt and we are going to be talking about market trends.
We're going to go, week to week. We'll also
For the month of July.
For the month of July. We'll also go year to year. So take a kind of a macro and a micro look of what's kind of going on in the real estate market. Yeah, let's take a look at the year view.
So it looks like new listings year to year is down 25.9%.
Okay.
So if we had, let's say, 100 homes on the market right now, or that came last year on the market, right now we've got about 75.
Right.
So
Okay.
inventory's down there.
Okay, so I mean, compared to a weekly comparison, we're actually up almost 9%. Although it's only 9%, but we are seeing, growth on a week-to-week basis.
Right. One of the jumps out at me is when you look at supply and demand.
Right.
The less apples there are in a season, the more expensive those apples go, and the more apples that we have, the cheaper they are.
Right.
So being down 25% of listings, that's still telling me that we've got a shortage of inventory out there.
Right.
So that means that there's less apples out there, and those apples are going to be getting more expensive. But as we drive in and look at a weekly comparison like that and seeing that inventory is kind of growing, it kind of thinks that's something that we need to keep an eye on to see where we're going. Because if it continues to grow at 8 and 8 and 8, we might get out of this 25% slump soon.
Right, and we are just coming off a record-breaking increase of home appreciation last year. So it's interesting to see statistics like that, how on a macro it's down, but on a weekly we're up. So it's something we got to keep up with trends.
Gotcha. The total amount of active listings on the market right now year over year is up 4%.
Okay.
So if we had, again, going back to that 100 conversation, if we had 100 homes on the market in July of 2021, we now have 104.
Right.
So I think that tells us that inventory is kind of growing a little bit. Even though there's less inventory that came on the market, that kind of means that some inventory hasn't selling.
Right. Okay.
Right? And what do you see on a weekly level?
On a weekly, it's up 5.
Oh,
5.5,
okay.
5.5 as a matter of fact. So same conversation, 105 homes are now hitting the market.
So that's kind of telling us a little bit about buyer demand.
Right.
One of the things that we're tracking to see if a market shifts up or down is buyer demand. And growing inventory are going to be our lead indicators, data-wise, if our market's in for a shift downwards. Pending sales?
Yep.
I have, for year to year, we are down 39.4%.
Wow.
That's a lot.
That's huge.
That's
oh
huge,
my
right?
gosh.
So going back to that 100 number, if you have 100 homes went pending last year, we are down. We've got 60.
Right.
So that's kind of a lead indicator of buyer demand.
On a weekly, we're down 3.5%.
Got you. So a steady decrease in the month of July is kind of what we're seeing, and a huge overall year to year.
That's an interesting conversation because before, when the interest rates were competitive, hey, I can buy that house and still have some money left over in the budget to be able to do those things. So this is going to be an important statistic, right? The pending sales moving forward with the new buyers at the new rates is, now the ends don't justify the means, right? Hey, I can't buy that and still put money into it because, now I'm paying more. So definitely a good, statistic for us to look at.
Yeah.
And that's going to be, I think, pendings are going to be a very important thing to see where the market's shifting.
Yeah, I think also when you look at when they were buying that house at 3% interest rate, they could afford to get a beater upper and say it's okay because the payment that I can afford, I can still put some money away and fix that house up. And now, because that mortgage payment is probably $300 to $500 more a month, they're really looking and saying, hey, I want more for my house, more bang for my buck.
Yeah.
Interest closed escrows are down 33.8% from this time last year in the San Fernando Valley.
That's a lot.
That's huge. So again, going back to that 100 statistic number, if there were 100 sales last year and we're down 33, that means only it's about 70-something homes have sold. So that's a huge number of less amount of homes that are selling. What are you seeing?
Also same. It's down 3.5%.
Okay. So it's kind of interesting in the pendings at 39 and the closed escrows at 33, and then on the weekly pendings at 3.2 and closed at 3.5. They're pretty relevant numbers, and I think that those are on a downward shift. So less inventory coming up, but also less buyers, less escrows closing. may indicate a stagnant shift. I mean, just a flattening, maybe not a crash, but I think that kind of tells me what I see as a flattening.
And a flattening is not necessarily a bad thing. I mean, I would love for prices to move sideways for a bit.
Absolutely.
If the market shoots up or shoots down, could cause a lot of panic.
Yeah. I think the growth that we had at 26% jump last year was just way too much, especially year after year after year. And a crash would kind of be a lot too, but a flattening I think would be great. And as I look at the sale data, I think that's kind of what I see. And what just jumped out at me too right now, when you look at the month of July, at historically which are your best months for the most amount of sales, typically the year end and the beginning of the year is our softer part of the market. This is normally our prime.
Yeah. Well, a lot of people like to move in between seasons, in between schools. So you're going to see a lot of people wanting to get into the new school district. They don't want to uproot their kids from their normal routine. So you will see July, the summertime, being a very hot market.
Let's jump into single family median price. We're up 6.4%.
Yeah, same on a weekly basis. We're up. Or actually, no, I'm sorry, we're down 6.5%.
Down.
Yeah.
Interesting. So when you look at this time last year, a buyer was paying 6.4% less for the home than they are this year.
Yeah.
But when you look at it from a week ago, they're paying 6.5% less.
Yeah.
And that's some interesting data, because someone could turn around and tell you, oh, the market's still thriving. It's up 6.4% this time last year. But if you really look at where we were from June to July, values have dropped about 6%.
Yeah.
So again, it's a good time to be a buyer. Next stat we have here is condominium.
Okay.
Condominium price from July 2021 to July 2022 up 23%.
Yeah.
So typically those are the most affordable lower price point homes.
Right.
Easiest to get into because they're priced well, and they're up 23%. So if you had 100 houses that are value, they were 100, now they're worth 123,000.
Correct.
Versus that. And where are you at in the weekly?
We're going to be up 12%.
We're up 12.
Yeah.
Up 12%. So that kind of tells you that the buyers that are out there are really in that entry level, lower price point, though they're gobbling up inventory.
Weekly basis, the condominiums you're seeing a very big growth. But on a weekly basis for single family, you're seeing a better bang for your buck to get into a single family home, because the price to get into a condo is actually going up.
Wow. Yeah, that's interesting. If you're really looking for a value, it really is in the house. Although you might be paying 5, 6, maybe even 700,000, you're still going to be able to get it at a discount, where if you were looking at a condo that might have been 440, you might be paying 460 for that, because there's more buyers out there looking at that for that price range. More growth.
Yeah.
Interesting. And it's interesting because, when you look at a lot of data that comes out, they always go last year versus this year. And in a market that's changing rapidly, I think it's more important to focus in on some local weekly stats than the big yearly stats, because the market's in the middle of a shift, and I think this gives us a better gauge than the yearly stats. But they're still important to look at, but I like those to focus in on that when I'm talking to my clients and educating them about what to do in the marketplace. But just to wrap things up, if they are interested in a buyer consultation, we would love to meet with you. If you're thinking about selling your home, there should be a link down below that you can book a link with us, a meet with us anytime. And hope this information was valuable.
Yeah.
And we'll see them next time.
See you guys next time.
All right, guys. Thanks. Bye.